The question of, does the timing matter? Barry Bannister yesterday suggests that there's a window that investors have, that the market in the fourth quarter of this year and in the early part of next year can actually go up, because we do have a window. Things are strong enough. There are some counterintuitive things in there which can lead to stocks having a decent little run before reality sets in and the you-know-what hits the fan of a recession.
Well, okay, so I think, yes, that's true on windows, and that's always where we get back to time frame. But let's actually narrow in on that recession. And I was writing that down when Shannon was saying it, which is the Fed. She said the Fed needs to extract pain. I would argue that they already have extracted massive pain. And she said they need to trigger a recession. But I think this is really where the nuance comes in. And we need to ask ourselves, what kind of recession are we talking about? Is it a long, deep, painful, broad-based recession? Or is it a bit more like what Ed Yardeni has been arguing? Is it a series of rolling recessions? Can we get through this without a broad-based recession that extracts just colossal pain all at once for everyone? Or can we have a recession in employment? Can we have a recession in housing? Do those need to all happen at once? I don't know. No one knows. The Fed doesn't know. But this is what we're working through. And then that's where Shannon made a really good point, which is, will the Fed really be data dependent, or will they be dug in? I've been for a long time and continue to be in the camp that they will be data dependent. Getting back to the windows, Scott, I think this is really interesting. I saw a really fascinating statistic earlier this week, which, as it turns out, like, we can look at the market and we can say, oh, it's overvalued still. It's trading at 16 times earnings. We think that's too much. But if you look at the median multiple of the S&P 500, it's at 14.3 times right now. And that suggests that the pain, that there's already been tremendous pain delivered. Brian Sullivan had a really interesting, random but interesting statistic the other morning, where he showed that $3 trillion has come out of market cap, has come out of the market in 5 stocks alone. So as I'm looking at this, I'm seeing that significant pain has already been delivered, that significant reconciliation has already happened. And so I think, yeah, we could bottom. We could have a nice little rally. I don't think that's like yesteryear's rallies, where it's all sunshine and rainbows and huge plus 20%. But I think the worst is probably over. And one thing I want to argue with Steve, where he said, of course I want to argue with Steve, but where he said, you can't wait for, like, we haven't been at the bottom. You can't buy now. You can't buy stocks now. The bottom's not in. You know where I stand on this, is which is, you can always buy stocks, because not everything bottoms at once, and tremendous opportunity is out there. For me as a portfolio manager, I'm like lit up. And I know that there's pain. I know people are hurting. But there's more for me to do right now. There are more great investments to make right now than I've had in the better part of a year. So I'm actually having fun, even though the conversations are hard.
You're having fun. Okay, maybe you're one of the few.